for someone who's looking to buy SOFI and is bullish on the stock, I am extremely pissed off at the content I'm seeing online on Twitter and YouTube. There are two myths that are going around. The first one is that the CEO is buying shares, so we must be bullish. He knows something that we do not know. And the second one is that the technicals are absolutely ready to take off and the stock will start reversing to the upside. And I'm going to debunk both of them. Just because you and I like the fundamentals and are bullish on the stock does not mean that we need to be fed this nonsense clickbaity news just for some engagement. So with that being said, let's jump onto the content. Let's start with the CEO purchases of 2.25 million shares that he bought on March 2nd, March 17th, May 8th, 11th, and June 16th. That all happened within this consolidation period, somewhere between $15 and $18 value. Now, that is all good, but let's zoom out and talk about the offerings that he dropped on the market. $1.7 billion of offering, 82 million shares on July 31st, 2025, and then another offering at $1.5 billion, 54.5 million shares in December 2025. That is a total of more than 130 million shares that were dropped on the market. And we're talking about how bullish the 2.25 million CEO purchases are. And as I mentioned before, I am bullish on the stock, but let's not be blinded by what has actually happened and what is going on. We're not here to just consume engagement and just keep buying this nonsense price action with our hard-earned money so they can dump another offering on us and then the stock slides lower. Now, there is an argument to be made that if CEO is purchasing in this area, this must be bullish. He knows something that is coming. I'll get back to that just in a second. Imagine you have 8 people in the room and there's a pizza with 8 slices. The supply demand is just perfectly evened out. Everybody takes a slice and we're good to go. But imagine somebody comes in and drops 2 more pizzas and now you have 3 pizzas. Everybody gets to have 3 slices each. Some people might not be hungry. There's going to be slices left over, which basically destroys the supply-demand balance there. That means that there is too much pizza for only 8 people. This is exactly what an offering does. Them dumping and diluting their shares and dropping 130 million plus shares on the market dilutes the current supply. There are way more shares in the market versus people looking to purchase them. So when you look at a company that is as strong as SOFI, and I am looking to purchase this as well. I'm not saying that I'm bearish on the stock, but you need to understand, why is the stock not breaking over $50, $60, $70, right? There must be a reason, and that is clearly right in front of our eyes. So now that we understand what an offering does to the share count and how it dilutes the whole pool of shares, let's talk about how the CEO purchases are impacting the market. Now, everybody's using that as bullish news, but there's some caveat to it. He has purchased about $2.45 million worth of shares in the last few months. And that reflects really nicely on the company. And that is what everybody's posting out there. And that is what's showing up on the headlines to make the company look good. But what everybody's missing is that the CEO is hedging his downside by a very large bet. And the funny part about that bet is that it is so under the table but legal that nobody's talking about it. It never hit the headlines. But it is super important for you to understand that the CEO has given a bank 1.5 million shares as collateral to get $24.1 million cash wired to him on spot. There was no headline for it because the shares were not actually sold, and there was no tax bill for it either. So the way it works is that in 2028, he will settle in shares, and how many shares, it's just going to depend on that time. And the way it's designed is that if the stock falls below $18.21, the bank will take the loss and he will keep the $24 million in cash. But if the stock is above 18.21, which is the floor, there's an undisclosed way that he pays this off, but that's a win-win for the bank and for him, because this collateral is only 12% of his entire stake. So he's betting on the upside, but at the same time, he's not blind scrolling through Twitter or YouTube hoping that the stock takes off. He is the CEO. He knows things can happen. So he's betting on the downside as well. He has collected $24 million in cash just to hedge himself on the downside. So if the company goes bankrupt, you and I lose our shares, he still comes out winning either way. And this is what pisses me off. Every time you look online, everybody's talking about the CEO purchasing, and he might as well keep purchasing for next few months. but that does not mean that he has 100% conviction to the upside, and that does not mean that his share count is so high that the stock should start reversing just because he purchased. So with that said, let's jump on to the technicals and let me debunk the technical myth here. Everybody's saying that the stock is ready to break out just because, let me make this a daily chart. Just because we are in this downtrend that we finally broke, and then we're going to retest this line. So downtrend break, retest, and now we're going to take off. And okay, great. But have you zoomed out enough to understand that we have a supply zone above $23.24? We tried to break out here in 2021 and never broke through it. We tried to break out here again last year. We struggled, then we finally broke out above it with some news and headline news and some good quarterly reports, but then we rejected under it and never retraced back again. So what are the chances that we come back here again just so we continue higher? I don't think that's what's going to happen. I think if we do break out here, by any chance, we're probably going to reject again. Most likely, you can see that the company has developed a pattern with these two touch points. The moment we get above this price range, they do like to sell into this strength. All the buyers here that will come in hoping for another breakout will be the exit liquidity for the company, because they have shown that twice before they have dumped billions of dollars of shares in the market the moment the price breaks out above $22. So I personally don't think we're ready. The second thing I want to notice is, let's zoom in here a little bit more. This is not the technicals we're supposed to focus on this time of the chart. We need to look at the fact that, let me draw a box here. We need to look at the fact that every time we touch into this zone, the supply is coming in and the stock rejects and goes lower. Every time we push above $18, the stock comes down lower. There is a time to find this type of breakouts, and I know a lot of people are inexperienced online. This is not where you use downside resistance. There's a different time in the cycle where you do that. Right now, we have already peaked out after a euphoric move. Offering is where usually these euphoric moves end, and then you start looking for where would be a great area where liquidity absolutely flushes out. And if everybody on Twitter and YouTube is asking people to buy the stock because the CEO purchases, the best entry would be when we reject this area. All those people who are buying in get flushed out under $13, under $14. We sweep this level. The company gets to a point where it's a no-brainer to reverse. That is when we're going to reverse back up again. And that is where you get that 80 to 100% win on a stock. Another thing I want you to also realize is that if you enter here, your upside is really about $35. I understand that you believe that the company is worth $50, $60, but with this type of offerings, you can't trust a company like that. As bullish as I am, cannot trust them, right? So if your upside is only 35, 40%, what is your downside like? So if we do take out this double bottom and the chart flushes, your downside is another 25 to 30%. Now ask yourself a question. Do you really want to take a trade where your upside is only 35% and downside is about 25%? That is not a trade worth taking. You might get this flush and you might enter a recession. The stock doesn't look back for another 3 years. So I've said everything I needed to say to explain you what is going on underneath the hood. But if I had to summarize this, let me explain this to you one last time. This technical breakdown and breakout will not work on this chart. And even if it does, we have a cap at around $23 to $24. And if you think I'm wrong, look back again, because this company cannot be trusted above $22 because they themselves don't believe that the company is worth holding the stock for long term. They are the ones diluting it. So I'm not the one saying it. I'm bullish, but they're telling me don't be bullish. I'm just taking the evidence from the market, right? That's one thing. Second thing is that the CEO buys don't matter because he's the one who approved these sells. Compared to how much money was diluted, his buy-in is very small to make this a big thing. And if my technical analysis is correct here, and $18 to $19 is the area where supply is coming in and shares are getting dumped on the open market, then most likely we will take out this double bottom. And you can add the crowdedness to this news, which is basically all the people promoting the stock and getting in more and more people involved with the stock, you'll see that a huge liquidity flush event will happen under $14.5, $15 because everybody who is buying here will realize that we're down already about 15 to 20%, and I do not want to hold this stock. And that, my friend, is where institutional money will come in. I am a buyer under $13, and I want to see this flush down, get an instant reversal back into the supply zone, and I am not going to be the one watching it, waiting on it, and holding the stock above $25, $26 area because, as I said, I do not trust the company to not drop another offering here. So from here, from let's say $13, my upside is about 80%, and if I hold it a little bit longer, maybe we push above 25 and go towards 26, my upside is about $100, 100%. And the downside, I mean, how low can it go from 13, right? If the company fundamentals are already really well at around $17, $18 area, then $13 is a bargain bin price. So with that said, I hope you understood what I'm trying to convey here. I'm not a bear on the stock. I am bullish on the company, but I'm just trying to protect you from being another casualty on a bull market cycle because I've seen enough of these cycles come and go. Enough people get rinsed who never come back to the market again because they're so scared of losing money again. Please leave a like, drop a comment to let me know what your thoughts are, or if you want me to review any particular ticker symbol. And with that said, I will catch you in the next one. Thank you so much for watching.